Hey everybody, Jake here at TrendSpider to go over the weekend video update into December 12th. And before I jump into the charts, I just wanted to announce that we do have a sale going on right now with up to 60% off plans until December 18th. So definitely check that out and take advantage of it if you do not already have a TrendSpider plan. Jumping into SPY, we'll do some broad markets and then some individual names. One thing that's really interesting here on SPY, you can see here that we have this MACD cross, and actually we've had another MACD cross in June, but I'm focusing on the MACD crosses above the zero line. And you can see here that the last one that happened in April and August were actually followed by very quick dead cat bounces. And that's kind of what we had a little bit Thursday and Friday this week. And you can see here that we did close almost near the low of the day on Friday. You can see the MACD starting to continue to move down towards the zero line. So not a great look here. And, anything can happen in the market, obviously. But the main thing I would definitely focus on if we do continue down into next week is the gap below. So you can see here, I just used the automated gap detection. It's just called the gap detector on TrendSpider through the indicators list. And you can see that gap fills down here right around 181 or so, give or take a few cents. So that is an area that you definitely want to keep an eye on for more downside. And then if we do have a bounce and continue up, the area above would simply just be this zone from anywhere from around 408 to 410. You can see here that this is just simply the previous resistance we had back in in September, and then again in early December. So those are the two levels that you definitely want to keep an eye on going into the week ahead and even into the rest of the year. And then you can see here on the weekly chart, we did move down and actually closed below the point of control on the weekly chart. So definitely an ugly candle going into the week ahead for SPY, the Qs, and IWM, and we'll get into that here in a second. But before we do that, we do have the Qs to look at on the daily chart here on the left. You can see that we also had a MACD cross here this week. The one thing that's different is we are holding this area pretty well. So the November low VWAP zone is right in line with this November horizontal support zone. So that's why I have confluence here. You essentially have two levels that are holding up. And so that essentially means that you have more participants watching that area because you have multiple participants looking at price action, VWAP traders. So this area is definitely an important area to get above. Now, if you want to look more at possibly a bull case scenario on the weekly chart, you can see that price is still holding this volume shelf, this area where volume is supporting price here. So if we do hold this area, we could have a continued move to the upside if we break last week's high to test the all-time high VWAP zone, which was a reversal point back in March as well as August. So definitely keep that area in mind above, anywhere from around 315 up to around 320, 322. But we have a lot of room to move up before we even consider that area above. But just wanted to point out that this all-time high VWAP zone has been an important area this year. Going into IWM, a pretty ugly chart. And what's interesting is we actually have the October 13th low VWAP zone holding pretty well. You can see here that we did have a gap fill, and that's interesting because we have not filled those gaps on SPY and Qs. So it may be that IWM is leading and we could continue lower going into the week ahead if we close below the bottom of this zone right around 178 or so. Now on the weekly chart, you can see here that we do have once again another rejection at this area. This resistance zone that we've highlighted in the previous last couple videos. And you'll see here that we pretty much broke down through the main area that we were watching, which is this volume shelf here, this area that was pointing out. It's not exactly the point of control. The point of control is a little higher, but you can see that we are starting to get into this volume gap below. Price can move very quickly through these areas, upside and downside. So remember that this can be kind of a vacuum for price if we do continue down next week. So a hard rejection here and a very ugly weekly candle going into the week ahead. A look at Bitcoin, we definitely have some issues here as well. We cannot get above this November 5th high VWAP. So you can see here this zone we have tested multiple times over the last 10 to 12 days. And you can see here that until we get above that November 5th high VWAP, we're definitely looking a little rough here. And then if you look at the weekly chart, you'll see here that we do have essentially this bear flag. And if you look at the previous moves, we've had quite a few bear flags with continuation to the downside. So if we do happen to continue up and break above that November 5th high, then this area, this previous support zone, anywhere from around 18.2 all the way up to around 18.5 would definitely be an area above to watch. And that is that's contingent on a close above that November 5th high VWAP zone. And as I mentioned, you got the bear flag, but a bear flag does not mean that it's definitely going to be bearish. That is the setup. You've got the big move down here on the candle. You've got the bear flag forming. And does it play out? Does it not? We'll just have to see. But that November 5th high VWAP zone is a pretty important part of that equation. Going into some individual names, we have XOM here. XOM is not looking great either. So we finally broke down through this November 10th and this November 21st low zone right here. So once we broke down through that, we pretty much gapped down and continued to test the swing low VWAP zone. And you can see that, that's anywhere from around 104 up to around 104.75. We closed below that. Definitely not a great look here on the daily chart. And then if you look at the weekly chart, you'll see here that we do have a lot of room to move down to test the potential support zone below. That is anywhere from around 94.50 all the way up to around 98 right now. Remember, these diagonal zones are a function of time. So, the longer that it takes to meet this area below, the price is actually going to be higher for potential support. So if we move down next week, our area is right around, let's say 94 up to around 98. If this took a while, if we just went pretty much sideways, we would meet this support zone here too. So it just depends on how long it takes for price to reach the support zone, and that will be a function of what those price levels actually are. But going into next week, anywhere from around 94 to 98 below would be your potential support zone there for XOM. Going into Apple, we pretty much have two symmetrical triangles here. One on the daily, you can see here that we are still kind of trading within this area, and we still have quite a bit of time for price to just chop around within this symmetrical triangle. That goes all the way to around January 20th. So we could literally just chop around within this area, getting a tighter and tighter range. Generally, we do get a move above or below this area before we get to the exact apex, but we technically could just literally trade into the end of this symmetrical triangle, and then we'll kind of go from there. But that's weeks away if we do actually continue to just trade in this symmetrical triangle zone. On the weekly chart, we also have a symmetrical triangle. Two different areas though. This one originates in June of 2022. This one originates in September of 2020. So they may look the same, but they're definitely not measuring the same length of time. And you can see here that we are nearing the support zone below. So that goes all the way down to around 138. And you can see here that we do also have a gap below that fills right around 138.50. So the gap below and this potential weekly support zone are both right around that 138 area. So 138 is an area you definitely want to keep an eye on. If we break 138, remember we have this daily symmetrical triangle support zone that goes all the way down to around 136, 136.50. So that would also be an area for potential daily breakdown if we did break below that area with a daily close. Next one is Tesla. You can see here that Tesla technically had a potential inverse head and shoulders earlier in the week. We did break down through this left shoulder low. So 177.50, a close below that, invalidated this setup. You had the gap fill below, and we did fill that. And we actually have a decent candle here on Friday. And if you go to the raindrop chart, you'll see that there's actually a decent amount of volume within the top of the range here of this candle. So that definitely tells me that there was conviction by buyers here, especially on such a weak day in the market. This one actually held its own pretty well. And if you do use the gap detector, once again, we're kind of trading in between two gaps that have quite a range. So the closest gap above that we have fills right around 263. The gap that we have nearest below that has not filled is right around 137.50. So we are trading in between gaps that are very far away from each other, which tells me we definitely could have some volatility going into the end of the year, into early next year. Now, looking at the weekly chart, you'll see here that we are having trouble kind of getting and holding above this previous support zone, now acting as resistance over the last couple weeks. We broke above it last week, and now we're kind of holding right at it this week. And that happens to be right where the COVID low VWAP is as well. So kind of just trading around this area, almost like a line of best fit for now. And we'll see if we actually break below this low that we saw on November 22nd. That is right around 166. So a daily close below 166 would definitely be more of a bearish setup there. And then if we do continue up into next week, the previous highs that we saw back on November 15th and then December 1st would simply be our area above, anywhere from around 196 all the way up to around 200. So 196 to 200 to the upside, and then 166 below is definitely an area you want to hold. If not, the gap below and that 2019 low VWAP zone would be in play, which both are right around 135 to 138. So those are definitely areas to watch on the upside and the downside for Tesla. Let price action decide where we go. Don't try to have a bias. Just take a look at price action, see what's happening, and adjust your thesis and your trading from there. Going into AMD, this has been a pretty rough looking stock over the last few days. At this point, about a week and a half or so. And you'll see here that we have this MACD that is starting to curl and cross to the downside and really starting to accelerate. And the last two times that we had that, we had continued big moves to the downside. So if we do continue down, the first level that you'd want to watch below is just this gap below. That fills right around 63 or so, give or take a few cents. So downside, definitely keep an eye on around 63 for that gap fill. Upside, you actually do have a gap as well. So if we turn the gap detector back on, for whatever reason, it's not catching it. Oh, that's because it's not a gap. I thought that was a gap. So the gap that is above fills right around 83.50. Starts down here around 81.50 to 83.50. So that's your gap above. Gap below is right around 63. And before you get to the gap, if we did happen to continue to the upside, this triple top here from the November 15th, 23rd, and then the December 1st highs, right around 78 or so, would definitely be an area as well to watch on the upside before we got to that gap that's in the lower to mid 80s. Now, on the weekly chart, you can see here that we do continue to have this very strong downtrend. We weren't even able to get to the top of this resistance zone in this last move up. And then you can see here the weekly candle is just absolutely ugly going into the week ahead. So if I were to take a guess based on the MACD, based on the price action, the downside gap around 63 looks more likely to fill first. But as always, we'll let price action decide which way this goes. NVIDIA is the last one we'll take a look at, and this looks a lot different than AMD. We've continued to hit new highs. We hit a new high even on Friday, but you'll see here that we do have divergence. So we've been moving up with higher highs on price. We've been moving down with lower highs on the MACD, and you can also see that on the RSI as well. So you definitely have some negative divergence starting to form here. So you can see here this pink area pretty much aligns. Let me just do this real quick. So if we just draw a vertical line right around here and then right around here, you can see that, these definitely were topping patterns. The MACD was starting to roll over. The RSI was starting to show divergence, and we're seeing that exact same thing now going into pretty much middle December. So we'll see what happens, but all in all, not a great look for NVIDIA or really semis in general right now. And you'll see here that this is definitely a little bit different than AMD, where we actually did break out of this downward sloping line. So, this is definitely a little stronger than AMD, completely different weekly candle. So we are seeing, some slight discrepancies between these two, and we'll see which one actually plays out. Remember, anytime you have a breakout, you can have a retest. So if we pulled back and retested this previous resistance zone, that wouldn't be shocking either. A lot of breakouts do retest where they broke out. from. So that's something to keep in mind as well. But that is all I have for the weekend update. Hopefully this was helpful in understanding a little more about TrendSpider and some of the things that we do have, such as the automation tools like the gap detector, the raindrop charts that really give you a new perspective in visualizing volume in the markets. And we have a ton of other things that you should definitely try out. If you haven't already given TrendSpider a try and are currently a customer, big shout out to those that are customers of TrendSpider. We really appreciate your support. And we are looking forward to a very active 2023 with a lot of new features. And remember, if you do like these videos, please like and subscribe. And remember that holiday sale is going on until 12/18, up to 60% off. And if you have any questions at all, please feel free to reach out to us at hello@trendspider.com or our DMs on Twitter. Our handle is @TrendSpider. Our messages are open, so feel free to shoot us a message there as well. Hopefully everybody has a great holiday. We'll be doing another video into the end of the year, I think on the 29th. So there won't be a video the next 2 weeks, but definitely, hopefully these levels will help you over the next couple weeks come up with your trading plan and trading strategy and be able to execute however you make your trades. Everybody have a great one. Thanks for watching, and we'll see you next time.